Hey New Zealand, welcome back. Today we're looking at the scenario of selling and buying at the same time. We're doing a lot of this right now, and essentially it's for folks that have bought pre-2019, or perhaps they didn't do anything in the COVID boom and borrow on cheap money for investment properties. People are doing this for various personal reasons. They might be sick of the city that they live in and they want to relocate. They might be moving school zones to be at a better school zoning for their children. Now, another reason could be they want to be closer to work. There's a bunch of different reasons. They might have outgrown the house, they might have done the reno and they want something else. People do exciting things like this all the time. The important thing in this is timing, and you are selling and buying on the same day in most cases. So how does it actually work? Well, today we're going to look at an example and show you the basics of where to start on this process. Most of the cases, or most of the clients that we speak to, have had an increase in their wages, and they've also accumulated equity in their property. So they would have bought pre-2019, or perhaps they bought at a time where house prices were lower and now they're much higher. Basically, they have equity. Sometimes the equity is limited, but we'll walk you through that part as well. So we're going to look at where do we start with this, and we're going to start off with the pre-approval. We're then going to talk about some very key tips that are going to make this very efficient for you. If you are looking at doing this very soon, then you should definitely get in touch with us, because we probably do about 3 or 4 of these a month. So let's get into it. So over here, we've got a family that's selling their lovely home for $975,000. Now, you don't want to overestimate this number. If the agent's appraising it for a high amount, be conservative. It literally pays you. So if we've got $975 here, $685 for the mortgage, $2.5 for the lawyer fee, the agent will charge between 1 to 3.2%. Pick an absolute legend to sell your house, even if they're a little bit pricey. In my personal experience of doing this, it does help. In this example, we've got 3.2% of the sale price, which is $31,200, and the net proceeds are at $256,300. Now this $256,300, assuming there's no more cash on hand, serves as a 20% deposit for a price of $1.281500. So what this means is that if you want to buy a house with a 20% deposit, which is $256,300, then the max purchase price is $1.281500, of which you're borrowing $1,025,000. So this is the number that we really want to sense check. Over here, this family, they're a family of 4 with 1 car. We've got an income of $120K, $78K, no rental income, fixed expenses of $1,200, rates, insurance, Pilates, gym, Netflix, that sort of thing. And they've got a credit card of $10K, no personal loans, and my calculator is telling me they can borrow $1,049,000, which I want to make sure is more than what they're needing. Yep, $1,025,000, so they're in the clear. So this family is going to go for a house at 1.281 at their absolute max. They can go a little bit lower than this, but it will be a new build. I've also got a 10% deposit here for 2.56, but let's be honest, it's pretty silly to upgrade from a close to $1 million house to 2.5, unless you got a little bit of early inheritance or you won the lotto. These guys are in a pretty good spot to be able to make this decision. They don't want to overdo it as well, but they can go up to 1.28. Now, where to from here? So you will submit your documents to us after we've had a chat to you and gone through a review like this. We will get you a pre-approval contingent on the basis that you sell your house for X amount, and we have a confirmation from your solicitor or your lawyer that you've sold your house unconditionally. So now moving on to the key tips. We're going to work through 3 things that we think are going to help you and make this more efficient for you that we do for our clients, and what we recommend and what we advise them on. The first thing we tell them is an early release of your deposit. Remember, the house that you want to buy, essentially that needs a deposit too. So you would request your lawyer to insert an early release deposit in your clauses on the sale and purchase agreement. Now, if the person has 100% of their savings as KiwiSaver, this might be a bit tough because early release doesn't really work well with KiwiSaver. And if they're someone like you, they've sold and now they're buying, this would work completely fine for you. Remember though, when your house is sold unconditionally, the real estate agent is getting paid their fee at that time. So you may want to talk to the agent on figuring out if you can get that paid at settlement. Chances are unlikely, but it's always worth a shot. So now that you've sold your house and it's unconditional and you've got the deposit, this deposit can be used for the next place. So if you're going to auction, your house has just gone unconditional on a Monday, the auction's on a Thursday, you'll get a variation agreement written up on making sure that the deposit is the amount that you can access from your lawyer, from the person that's bought your house. and you are unconditional at this point if you have had all your finance conditions also ticked off. Now, you can see that I've walked you through selling, and I'm talking about selling more, and the buying is on the second part. I'm saying this because a lot of clients that I've seen that succeed or buy properties under value that are owner occupied or get a 30 or 40K discount are unconditional. So if you make an offer on a house on the condition of your sale, so your house being unconditional, that's not very attractive in a market to a vendor. So they wouldn't really look at your offer as much as they'd look at an unconditional offer. So what I'm saying here is that if you focus on the sale really well and you get that done and out of the way, you're an unconditional buyer. And we all know if you're an unconditional buyer, it means a little bit of discounting on the purchase price, unless you're buying a house that 17 other families want in New Zealand. It's probably going to be a bit of a competitive battle. Now, the next thing we're going to think about is the settlement. You want the settlement of the house that you're selling essentially 60 to 90 days out. You want a window to look for properties. You might have seen something that interested you. You might miss out on it. Essentially, you want a 90-day settlement, and that will allow you to go and hunt around houses that you think would serve the best for you. If you find a house that has a settlement date 2 or 3 weeks out, you can negotiate with the purchaser of your house to bring the settlement forward. It can completely happen. Essentially, it depends on each circumstance. But what we're saying here is if you push it out 60 to 90 days, it might pay you because you'll get more time to look for houses. Now, the third thing, if you're part of this lucky bunch, honestly, salute to you. If you've locked in a 3.99 fixed rate till 2027, and that's half your mortgage, so let's say 400K in this example of the mortgages on that, you are wanting to keep that rate. And the way you keep that rate is by doing a security swap. So if you've made it to settling on the same day, all the contracts are unconditional, but you want to keep the rate now, we can swap the portion that you need from the bank. So say you need $1 million from the bank, but 400K off your old mortgage is on 3.99. You can have that on 3.99 and 600 to be on a newer rate, 4.79, 4.89, whatever the rate might be at the time. Now that saves you heaps of money because you're on a lower rate and you're already starting off well. That's 2 years of cheaper interest that no one else has. So that's the best situation to be in if you can do that. But remember, you need 20% equity in the property that you're buying, as in your deposit needs to be 20%. If it's below 20%, then this doesn't apply to you. All of the old lending normally has to be paid back and the new lending is then issued. So to be saying goodbye to your 3.99% rate. So that's pretty much it, guys, but there's a lot more to it. Many times clients book a meeting with us and these sessions run for an hour to best strategize on what would serve them the best. The conversation is normally around what they can borrow, what the deposit would be if they want to pay off any short-term debts, if there's any break costs, if there's any other family money that's coming into the equation, if they're buying with another family. Everyone has a unique situation, and here at Blueprint, we help a ton of different cases. So if you do want to get in touch and want to ensure that you plan before you even send us a bank statement, we can do all the numbers for you and get you the approvals across multiple banks, whether that's ANZ, Westpac, BNZ, Kiwi Bank. We'll tell you the right pricing, cashback terms, and if you want the right strategic mortgage structure to pay the debt off faster or plan for an investment property later, do get in touch. I hope you enjoyed, and I wish you all the very best.